back to BLOCKTV. It's time now for Chain Breakers, where we talk to the top voices in the blockchain and digital assets ecosystem. We're joined now by Bruce Fenton, CEO and founder of Atlantic Financial, Chainstone Labs, and the Satoshi Roundtable Retreats, to discuss some of the latest news and events across the crypto space. Firstly, Bruce, thanks so much for joining us.
Thank you.
All right, so Bruce, a lot of news headlines being made at the moment as we see markets surging across crypto assets. In fact, it seems to be a bit of a change of pace as well, with Bitcoin itself being almost the lackluster performance, gaining only about 6% or so in the last week compared to so many of the other alts out there. None other can be beaten, of course, than BSV, which in the last week alone has managed to gain a whopping 200%. Surging yesterday, at some points, double its market value in the 24-hour period. Bruce, what do you make of all this rampant movement? Is this just the wild swings of the crypto markets, or is there something different going on here?
It is very strange. These markets never cease to amaze me. I don't think a lot of people predicted that, even the biggest fans of BSV. To have a move like that was pretty unusual. And a lot of the moves with some of the other alts, Dash was up 60% or something like that. Ethereum Classic, I think, was up 30, 40%. Just wild moves all across the board, kind of out of nowhere. Very interesting after a lot of time over the last really 2 years of either down or flat markets. And then, we've had a couple surges, but yeah, very interesting day. It certainly shows there's still a lot of interest and a lot of money out there. As you mentioned, Bitcoin was one of the smaller movers, but Bitcoin also has the most assets. So it takes a lot more money to move Bitcoin. Very, very interesting overall.
It's interesting to note that all in all, once all was said and done, and the big pumps that we saw yesterday, about $20 billion were added to the overall crypto markets. I mean, where does money like that seem to come from at a time when there doesn't seem to be major news or new inflows of cash out there? I mean, is there a risk that there's some market manipulation going on here, or do you think there's genuinely that amount of fresh liquidity entering the space?
There's always market manipulation. It's unlikely that that was all fresh liquidity that caused it. It's because the way that these markets move, particularly the less stable ones, or the smaller markets, the way that they move. The smaller the market, the easier it is to move with a smaller amount of money. So if you have a thinly traded market, a very small amount of money can cause a radical price increase. But, yesterday we saw real volume. So it wasn't just a case of, BSV wasn't very thinly traded. It had a lot of volume. So that's very, very interesting. And that shows that there probably was a lot of money on the sidelines from institutional investors and other investors, people who have money in stable coins and other things like that.
People ready to get into this market as it surges potentially, maybe towards that halving event that we're going to see around May of this year, but we'll have to wait and see how that one plays out. So now let's turn to the more tangible topics that we can actually get a footing on and a bit of a grounding on. Now, the SEC has just come out with a guidance warning investors about investing in IEOs, that's initial exchange offerings, a sort of hot product of early 2019, had a lot of promise, doesn't seem to have really reached the heights that many may have hoped for, and now this new SEC guidance warning against them, effectively saying they're just ICOs by another name. Things don't look great for the future of IEOs, do they?
Yeah, they don't. I predicted this exactly. There's not a lot of things that I predict, but this is one that I predicted exactly. And that's just because I think the SEC has been very clear. These rules have been around for 85 years, and they don't really care. Even predating crypto, there was always somebody trying to do some new structure to avoid securities laws. And they don't really care whether it's a metal key or a piece of paper or something called a token. They're going to want people to follow those rules, which are pretty broad. And in the United States, basically, if you're raising money on a tradable instrument like this that has an investment contract and depends on people running it and a lot of other factors, that's usually going to be a security. So it doesn't matter what you call it. Most ICOs were securities, and they were offered not in compliance with the law. A lot of them broke the US rules in the way that they were offered. Changing the name to something else doesn't change that. So everything is going to be subject to these rules. I don't think that's a bad thing. I think that just means more companies are going to need to do what we did and what a lot of other companies are doing, which is go the harder route and get those licenses and do the things that you need to do. And there's a lot of companies doing that now. But at least in the United States, where we operate, there really isn't a choice. These rules have been around for a very, very long time, and it's clear that the SEC is going to enforce them very strictly.
Right, and it's an interesting point you make there, saying this isn't necessarily a bad thing. I suppose I want to wonder with you, Bruce, looking at the fact that the SEC is now paying enough attention to crypto markets as a whole to be making these rulings, could that potentially be seen by some out there, particularly the institutional investors who want to work with regulators and whatnot, as a positive sign that the SEC is paying attention and looking to actually clarify some of the more muddy elements of this particular asset class?
Yeah, that's a great question, because I have kind of a dual view on that. On the one side, I'm very, very pro free market and in favor of liberty and voluntarism and people doing their own thing. So in an ideal world, I'd like to see a lot of these rules eliminated or reduced. There are some that protect, there's a lot of rules that do protect shareholders and personal property that I would still be in favor of. On the other hand, I come from the investment business, and I've been regulated for a long, long time. I'm a registered advisor and licensed broker under supervision of the SEC. So I see it from a different angle. The professionals in the investment business, they actually like to have some of this clarity. Family offices, money managers, investment brokers, certified financial planners. These kind of people just aren't going to recommend cryptocurrencies to their customers unless it's in a structure that they are familiar with. It's something, and that goes right down to the type of account. Some of them are even afraid of major crypto exchanges that we in the crypto community have been comfortable with for years. So to have more mainstream, and that's where most of the money is. That's where there's a lot of money with dentists and doctors in their 401k plans, with a financial advisor right in one of the buildings that you're showing there right now. And they're going to want to have that comfort level, which does come from some of this discussion from the SEC. So I do view it as a net positive, and although I'm very much on the liberty and free market side, I don't view the SEC as the enemy. They've been very pro free market in many ways, and whether you like the rules or not, they're here. They've been here for 85 years. They're probably not going anywhere. You can still do a lot of business. It's still the mother of all industry. There's trillions of dollars of business in the stock markets. Apple is a security, Microsoft is a security, all these other companies are securities. So being a security isn't a bad thing. It can lead to a lot of great trading and overall boost for the economy.
Certainly, perhaps just not in line with the goals of certain cryptocurrencies looking to get out into different fields. And quickly, before we move on to another topic, I want to touch on another move related to the SEC coming out just recently, which was that Bitwise has just sent a request to withdraw their application for their ETF. See there, they put out the letter saying that they want to withdraw the current request in the current climate, as they don't see current conditions suited to putting out a Bitcoin ETF. Is this something, Bruce, you think the market should care about, the market does care about, or is this whole ETF story just gone on so long, everybody's moved on?
It's gone on so long. I'm headed down to Miami to the Miami Bitcoin conference. The first one that I went to in 2014, I specifically remember meeting a good friend for the first time. We were talking. He said, "What do you want to do in this space?" I said, "Oh, I think I want to do an ETF maybe," because that's where my background was. And thank goodness I didn't, because I never would have dreamed that it would have taken this long. And my heart goes out to the people who've been trying and trying. Many companies, some have dropped the ball and others have picked it up. But what a colossal undertaking. And meanwhile, the markets have matured to a point where an ETF is less important. It used to be more important because you couldn't get crypto. But I don't see a lot of institutions or individuals sitting on the sidelines saying, "Oh boy, we'd buy Bitcoin if we could just figure out how. I just can't figure out this Coinbase thing. I can't understand Kraken. I really need that ETF." There just isn't a market for that. Most people who wanted exposure can find a way to get exposure. There would definitely be some advantages, and I predict it would raise a lot of money. And I hope somebody does it. But boy, what a long process. Crazy.
Yeah, certainly one that's been well dragged out. But all right, now let's turn to another topic where, again, people are being a little bit more proactive and potentially making big moves to change the space. Now, Spencer Dinwiddie, NBA player, has come out and tokenized his contract. It's been a bold sort of move, a long drawn-out process with extensive negotiations with the NBA in order to see that this was actually able to happen. And now, in its current form, much changed from what was originally planned. He's now able to sell his contract out in a tokenized form only to accredited investors. It's an interesting move and one with, I guess, varied applications and implications for the industry as a whole. But what do you make of the whole Spencer Dinwiddie affair, as it were, Bruce?
Well, I think it's fascinating, and I understand the NBA has kind of almost reopened. They looked like they had not approved it, then approved it, and now that it's kind of out, they're maybe looking at it again. But it does look like something is going forward based on his tweets and everything. I think, first of all, I believe it's $150,000 minimum, so it's an accredited investor kind of thing. So it's not something that retail people are going to rush out and buy, and that's good, because I think that, first of all, this kind of thing would probably be very, very risky. It's very unusual. Betting on somebody's future income or a contract where there's all kinds of factors in that, especially something as volatile as sports, very, very risky. However, also very, very exciting, because there's a lot of value in the world. The value is not zero. We know that. The value, this is a serious player with serious contract. The total contract, I believe, was 34 million. They're tokenizing 13 million. Clearly, it's not zero. There's nobody in the world who wouldn't take that for 100,000, right? So it's got value, probably somewhere north of 13 million, and that can be traded. So that invalidates a lot of arguments about, tokens don't have value or things like that. Tokens have value based on whatever the terms are of that token. A token can be an agreement or a smart contract, and really it's just the terms of that agreement. So in this case, it has value, and that's very fascinating, because there's trillions of dollars in value all around the world that can be unlocked, not just sports teams, but all kinds of things, and not just people's contracts. It could be all kinds of contracts, basically contracts. Every contract in the world could be tokenized in some form, and that's what's really exciting about this. This particular deal is very exciting too.
I mean, this is an interesting one as well, Bruce. Obviously notable because of the sort of, almost the generational investment you see from fans when it comes to teams, players, the sports as a whole. There's a lot involved in terms of identity and senses of self, and that move to allow investment. Although this particular contract is only being allowed to accredited investors, moving to the next stage, obviously, if it were open to the more retail user, could fundamentally change the relationship between fans and, as starting with sports stars, but as we've said, potentially any significant figure out there in the world. Do you think this could really be the start of a paradigm shift that could lead to those big changes?
Oh yeah, it's totally exciting, because you could have people. There's a fictitious stock exchange game called Hollywood Stock Exchange, where you can go and bet on your favorite actors, and you can buy star bonds, and you can bet on your favorite movies and what their box office is going to be and whether they're going to win the Academy Award. And you use these Hollywood bucks to play the game. You could do that in the real world with these things. You could say, I'm going to have a tokenized bond of Leonardo DiCaprio's contract with whatever company. And you could do it if you had a whole portfolio of these NBA players or NFL players or whatever. Your friend from high school, who's a great sports expert, could end up being kind of a fund manager. And that sounds silly, and it could be very, very high risk, especially under today's system. But in the future, that could actually become a really serious kind of thing that I would still probably not something I'd recommend a ton of money in, but it could be the kind of thing that fans are participating, and not just sports fans, but movie fans, and also fans of businesses, local community, ways to invest in your local restaurants, all kinds of things. If you make it easier for people to place risk on something and have a tradable instrument like a stock or a bond, and it can be traded easier through a token, that's really exciting. It can change the entire way the world works and change all of capital markets.
Well, let's talk about, though, you've sort of lightly addressed the issue of risks involved, but let's sort of pull that out a little bit more, because obviously when you start talking about something like this, where there's a lot of emotion involved, whether it be in celebrity and celebrity culture, athletes, whatnot, and a lot of people out there who are not necessarily going to put their money into what would be, designed as a low risk or careful and conscientious place. I mean, how do we risk this not devolving into just another form of gambling, as it were? Or is that the inevitable goal? I mean, the risk profiles here seem to be pretty high, at least for the uninformed
it's certainly
investor.
risky, and there could be some real problems with it, because it would be a very volatile kind of asset to do this if you had a huge portfolio of these kind of things. If they were actively trading, where anybody could just go and buy shares in their favorite player, that is risky. But gambling is legal in many places, and I'm actually in favor of that. I'm not in favor of gambling at all. I don't like those kind of risks, and when the house is against me, odds-wise, I stay away. So in my whole life, I've bet very, very, very little, on these kind of games. Maybe I don't think I've ever bet a dime on a game like this. I don't think I've ever played roulette. But I still think it should be legal. I don't like scratch tickets either, but I think they should be legal. Something like this is probably a higher quality investment. Sports is a real industry. Certainly, just like entertainment, very picky to pick winners, and probably not the kind of thing somebody would want to do with serious money. But it would be an interesting area to have just a little bit of extra exposure in an overall asset allocation. You might see something like 1% or 2% of a sports fan putting some of their funds into not one contract like this, but into a fund, where then that a professional fund manager who understands sports and investments goes and picks a portfolio of maybe 100 players or something like that. And that could be very, very interesting. But yeah, certainly very, very risky. But the good thing is, the more of these things that trade, the more fair it becomes. Just like ICOs, most of them were junk, most of them were very risky, some of them even broke the laws. But it was sort of self-correcting. If you have something like this and it's very overvalued, you have people betting radical amounts on teams, that'll self-correct really quickly, and you'd have some of the most basic knowledge level people who don't understand investing at all. Believe me, they lose 20 grand on a bond with an NFL player or something. They're going to be talking to their friends and saying, "Oh boy, don't do that. That's too risky at this season, or that's overvalued, or don't you see that it was trading at a premium?" And that educates people. So ultimately, the more things trade and the more fair they are and the more they're out there for people to trade, the more information there is and the more fair things become, and the less people get scammed.
There's certainly a potential for a brave new world out there, Bruce. I look forward to seeing how this one does play out in this specific case with Dinwiddie, and then off into the future. Bruce Fenton, I want to thank you so much for being with us today, helping to break down some of these key issues in the space. Exciting times look set to come, but for those at home, make sure you keep watching at blocktv.com for all the latest news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.